Cool. By the way, my name is Wayne McDonell. I've been doing currency trading for over 20 years. I think I started around the year 2000. Went pro, I think it was 2004. So I've been doing this a while. Before that, I was a venture capitalist, and before that, I was a high-tech entrepreneur in the Silicon Valley. In fact, I was a coach to high-tech startup CEOs. Yeah. So I've always been giving back because I coach now in Forex. I like it. I've been doing it forever. Before that, I worked in a nonprofit organization with people like George Soros, members of the United Nations, executives from General Electric, Arthur Andersen, the former president of AT&T, and me. Before that, I worked at NASA. Before that, I had a paper route. So that's me. Actually, I had 2 paper routes. Nice. Okay. Sandeep says, why is the dollar so strong at the moment? I don't see anything in the U.S. economy growth-wise favoring the dollar. Is it a manipulated market or just correction before a downward continuation? Okay, so why do you think the U.S. dollar should be weak, Sandeep? It's a good question, so let's explore this. Okay. Nice. Come on now. Why do you think it should be weak? Okay. By the way, while we wait for Sandeep, oh, more money is being printed. Okay. That is part of it, sure. But also we're interested in the rest of the world, right? All right, by the way, I want to show you a few different organizations that I'm associated with in which you can get further resources. Okay. Quantbox.co helps you uncover the best investment opportunities across global markets. It's my company. I'm the founder and a Harvard-educated macroeconomist. Cool. Beautiful stuff, right? Yeah, you can try it for $8. Very nice. Second one. Okay, FX Bootcamp. It's actually 88 hours now of Forex training videos. Trader psychology, swing trading, technical analysis basics, price action, MT4, MT5, fundamental analysis, day trading, macroeconomics course. Also on here is an oil course on the entire oil industry. To give you an example, this course here on macroeconomics is probably 16 hours long, and the oil trading course is probably about 16 hours as well. No joke. The cost of all of that, all of it, the cost is $88 a year. And then lastly, you need a trustworthy foreign exchange broker. I recommend Traders Way. I've been working with them for many, 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 many years. I think about 8 years. They earned my loyalty and respect when the Swiss National Bank pulled the plug on their peg to the euro. And it shocked the entire world. And many brokers that were trading against their clients got caught holding the bag and went out of business that day. Traders Way was perfectly fine and unaffected. So I contacted them and they're like, well, we don't trade against our clients. So we executed all the trades in the interbanking system. We're fine. Yeah, so there you go. So anyways, lots of resources if you need, if you want to follow what I do. Yep. What do I think about NFP? Well, I'm still answering the previous question. Sandeep wants to know, why is the dollar so strong? Well, it's macroeconomically related. Okay, so the United States is the reserve currency. Okay? And it's also a very rich economy, the biggest economy in the world. So when things are good, Sandeep, money leaves the United States and goes to the rest of the world. That's China. Okay. 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 And money flows around the world. Right? Now, one major reason is America's rich. So if it does business with China, very often you end up getting a better price. Or maybe Europe, being a modern economy, can give you specialization like a very, very nice car. Canada is a very, very close trading partner, not just by geographic region, but culturally. They also provide a lot of commodities that feed the economic engine of the United States. And then, of course, there's just everything else. Everything else, meaning all commodities in the world, are priced in US dollars, and the contracts are settled in US dollars. Even if it has nothing to do with the United States of America, it has to do with the price of the commodity is in terms of US dollar, because it's a reserve currency. So Sandeep, when things are good, the dollar's weak because what happens is there's a large supply of US dollars in the world. Now, when things are bad, Sandeep, the opposite happens. Okay? Money flows back to the United States. Either Americans are bringing their money home, they don't want to invest, or they don't want to spend overseas. But it's that, and people or countries or entities or companies want to save their money in US dollars. So they get their money out of their economy. They want to buy US dollars so they can buy US treasuries and ride out the economic storm globally in terms of US dollars. So it's weird. When things are good, money flows out of the United States. When things are bad, Sandeep, money flows to the United States. So what's going on now, Sandeep, is the flow of capital isn't based on inflation right now. That will change. But the global flow of capital right now has more to do with a global economic recession. And you will observe that sentiment through that US dollar strength. Okay? Okay? All right, so let's go back to today. What do I think the number is going to be? So one thing I already said is the market. Let me clear this out. Okay, all right. Okay. The market expects 190K. 19 of the last 20 were higher than expectations. So let's say it's going to be 200 plus. Okay? Now, the greater than 200, so let's say it's plus 250 or plus 300. here's the behavioral aspect of this. The bigger the number, the worse the impact. Okay? Okay? The bigger the number, the worse the impact. Big numbers are bad. Now, the reason that is the market wants the Fed to pause interest rates and, in fact, stop raising interest rates. A pause is not necessarily the terminal rate. Okay? So the higher the number, the more likely the Fed raises interest rates. And that is bad. So it's good news that people are not losing their jobs. In fact, it's good news that people are getting jobs. But that good news is bad because the Fed will have to do more, raising interest rates even further. Okay? Okay? So we know the expected return of a stock is equal to the risk-free rate of return minus the beta of the expected return of the market minus the risk-free rate of return. Right? What does this say? If the Fed raises interest rates, this goes up and this goes up because it's the same variable. And therefore, this goes down. The stock market falls. Is that good or is that bad? That the value of the stock market falls. Okay, so Jay is saying, if the result is higher, is it worse for the economy? This is exactly what I'm explaining. Okay, so if the stock market is falling, virtually every American that participates in the economy, okay, is going to lose money. So that's bad because now Americans have less money and they're going to buy less iPhones, they're going to buy less TVs, they're going to buy less cars. So money flows back to the United States, because remember that map I showed you? USA, money doesn't leave. It doesn't go to China. It doesn't go to EU. Less goes to Canada, and less goes to other. So now their economies start to contract because Americans are not buying as much stuff. And so their economies fall and money flows this way. And the demand for US dollar goes up. Okay? So if the number is good, that's bad because the Fed will have to do more, which pushes down the value of the stock market, which then increases the value of the US dollar. Okay? Now, Alton is astute and says, hey, using the Fed Watch tool, there's a high percentage of a skip with a number change that. That is what we're looking for. In fact, that is what we're talking about. If the number is 300, the pause, or the skip, as you say, may evaporate. If the number is 2, then we're definitely going to pause. Okay? If it comes out to 210,000, okay? All right, so let's take a look. By the way, did you click the thumbs up button yet? show FX Street some respect? I would say it's a common courtesy, in fact. All right, so let's take a look. 22% or 23% of market participants believe the Fed's going to raise interest rates at the Fed meeting. What was it at the last, right? What was it at the last Fed meeting? 0. Then, a few days later, it was up to about 16. Okay? Then it changed. Look at this. 1 week ago, this number that we're staring at here, check this out. Let me highlight this for you. Okay? This number here 1 week ago was 64%. So now it went from 0 all the way up to 64 and is now back at 22. What does this mean? First of all, there's a lot of inefficiency in the market. Okay? So I mean, imagine in the course of 2 or 3 weeks, this number went from 0 to 64% chance that the Fed does not pause. The Fed raises. There's 0% chance of a cut. Okay? All right, cool. So just in the last few days, this dropped down to 66. So now, we're looking at a pause, which is now being called a skip because, well, somebody said it in the news, and then it was repeated over and over again, and then every news person now says it. But what we used to call this is a hawkish pause. Now, what that means is the Fed doesn't raise interest rates, but are almost certainly going to raise interest rates in the near future. So they raise again in September. Okay? So that's interesting, huh? So when non-farm payrolls happens, if the number comes out 300K, the stock market's going to fall, and this is going to rise back to 60%. And this is going to drop back to 40. Okay? Stock market falls, gold falls, dollar gets strong, euro dollar falls, Kiwi dollar falls even further, Bitcoin falls. Anything else you want to know? All right, well, I'd like to thank everybody for coming. No, you know what? Why don't I stay a little longer and see what happens? Yeah, okay. Yeah, this sounds great. Yeah. Neat, right? So, just in case you don't know what we're looking at is bank-to-bank loans. And we're looking, right? Okay? What we're looking for, or what we see here is, or assuming here, is that they're professionals that have access to lots of information, and they can make intelligent decisions as professional negotiators in the price of money. So the way that this actually works, they don't actually negotiate a probability. They negotiate a price. Okay? So you could say, lend me $94.88. Okay? Lend me $94.88 and I'll pay you back $100. So it's an implied, the price implies an interest rate. Okay. Good morning, Factor 263. How are you today? Family Time says number is always cooked. They want it to pause. Yeah, but the Fed doesn't release the NFP number. Okay. Good morning, Tellerson. So dollar yen, I'm out of this trade. I got out, how many people, who remembers? 2 days ago? I think I got out 2 days ago. I bought it here around 131. I exited, I guess, around 140, 3 days ago. So I took out approximately 700 pips. Good. Good. So how far is that going to go? Well, we don't know in the moment. A lot of this will, the answer to that will have a lot to do with the Fed, and the Fed will have somewhat to do with NFP. NFP, you know, if we think about probabilities, it's probably going to be higher than expected, but not dramatically higher than expected. Okay. So, yeah. Then we could resume. You could resume if you were going to use pure technical analysis. You see what I've already done. I've already grabbed this and dragged it across. So one could assume if the previous trend continues, then this is the next move. Assuming let's say an NFP and a Fed that doesn't challenge that trend. Okay. Tellison says, Mr. Wayne McDonell, FX Street. Yeah? You have a question or just saying good morning? I'll say good morning just in case it's just good morning. Cool. Now, is there anything that could challenge that trade strategy? There's nothing wrong with it, of course, but what would the counter argument be? The Bank of Japan could raise interest rates or change the YCC policy, or both. Yes. 100%. Hundo P, Jimmy. Yeah. So we're so focused right now on dollar that we forget that there's also a lot of interesting things going on at this central bank. So, you know, it throws into question whether that outcome could happen. So, for example, BOJ could, let's say, leave the YCC in place, but raise interest rates. Well, that could lead to yen strength. Meanwhile, let's say the Fed pauses, NFP today is about 200,000, and inflation continues down. It looks like soft landing. That's good news for the United States. The stock market goes up. American consumers keep spending. They buy a Samsung Fold 5 for $2,000. The Korean won goes up and the US dollar goes down because everything is right as rain, and all of a sudden you get a complete reversal. Could that happen? Oh, faux show. Okay. Dave says, gold, bullish or bearish? Dave, what time frame are you talking about? Are you talking about today or this year? Yeah, you have to ask a decent question. I can't answer that. What does that mean, right? Well, Dave asked the question. J-Man says between now and July, so you mean the month of June. Okay, but still, let's go with Dave. Davey, come on, Dave. Danny, are you talking about FXBootcamp.com? Come on, Dave, dude. Let's go. Is there a lag? What goes on? Why do people ask questions and then leave? I don't understand the point. Come on, Dave. What time frame? Okay. Yeah, Dave Dipsy, come on. No? How can I join your FX Bootcamp? You give me your credit card and I charge you money. Every year, $88. So you go to fxbootcamp.com, insert your credit card. Couldn't be any easier. All right, well, Dave is not answering, so, well, thanks for coming by and adding a question, I guess. Let's just see what's moving right now. Hang on, let me log into my database. Boop, boop, boo. Let me log in. Sharona. Logging into the Google Cloud. Okay. Let's remove the stock markets. And let's see, let's update scatter plot. Wow, look at the rebound in oil. Holy smokes. Let's get rid of commodities. Let's just look at the currencies for today. See the biggest movers. Everything over here is out of position. Just so you know, we use this tool so that within seconds we know what our next trades are likely to be. Okay? So if you look at this as a grid, okay, everything down here, so everything down here is down, and they were expected to be down. So that's good. Negative times a negative is a positive. Everything up here is up, and it's expected to be up. What do I mean by expected? Quantitative analysis of macroeconomic data suggests everything over here should be up, and they are up. So a positive times a positive is a positive. A negative times a negative is a positive because we expected all this to be down. Well, there's not a lot down, okay? Everything over here is down but was expected to be up, and everything over here is up but expected to be down. So these are negative things. So these are the opportunities, okay? Everything here and here are opportunities because they're not aligned with fundamental forces. So these things are high, but they might be a sell later today or next week. Or maybe the trend has changed, but there's no fundamental reason for that to have changed yet, maybe. Okay? So we want to look at that and say Aussie Swissy's up, Kiwi yen is up, Kiwi dollar's up, Aussie Swiss franc is up, Aussie dollar. So CAD Swissy, so commodities are up today. Is that good or not? We don't know. Stock markets are currently up. As you see around the world, stock markets are up today. Probably related to the resolution to the debt ceiling in the United States. And yet most currencies are quite flat. Let's take a look at the heat map just to find out what is moving in the moment. Oil's the biggest winner, followed by NASDAQ, the Japanese stock market, the German stock market, the US stock market, the British stock market, and Bitcoin. We are definitely risk on in the moment. Aussie Swissy, Aussie yen, Aussie dollar, Swissy, right? Kiwi Swissy, Kiwi yen, okay? Just lots of commodities are up. Stock markets are up. Definitely risk on US dollar weakness. Okay, cool. So we'll see if that's going to hold through. Just quickly look at some of these things. Oil is up and neutral, so we're kind of in here, but there. Take a look. A lot of y'all have gold ambitions. Gold is quantitatively should be up. Okay. Although retail is short. You see this? Retail is short. Okay. Institutional is long. Retail is short. How much time do we have? We still have a few minutes. Yeah. Take a look at euro dollar. Okay. Here's sentiment. Seasonality. It's down, but typically it's up and then down. So this downward move is a little early, but of course we know that that has a lot to do, or entirely to do with the Fed. Retail is neutral. And really this pair is quite neutral as well when it comes to institutional positioning. Okay, this lines up a little better. Okay, this is the one I was on for, what, a month? I think I was in for a month. Pulled out 700 pips on this trade. And yet, retail traders are short. Amazing, right? So I suspect that this will change. This is a commitment of traders report. I think this yen short is going to change, especially if YCC changes or the Bank of Japan's interest rate policy changes. So we know Uede, who's the new person in charge of the Bank of Japan, is likely in the next weeks or months adjust the monetary policy of the bank And I have a feeling based on that and on seasonality that the yen becomes less bearish. Maybe not bullish, but less bearish. Traders are very long gold. Okay. Very interesting. But we have a lot to go yet. Again, let's take a look at gold. We're trying to line these things up. Okay, the green line is a 20-year average. The red line is a 5-year average. Typically, the month of May is neutral. June is sort of neutral. It fades down, fades up, fades down, and the bigger move is up. So the way I look at this is gold is sort of like slightly up to neutral on the short run. So gold is at, what, 2,000 right now? So this could kind of like, so if we're at 2,000, let's say it just farts around 2,000, and then by the end, between now and the end of summer, it drops back to maybe 18, and then seasonally returns back to 2,000, 2,100. Okay, that's my thought. Now, let me do something different. That's the tool, but since I'm the boss, let me log into the back office. Hang on a second. Let me log into the back office. Let me get the secret sauce. Let me get the secret sauce. I want to see if this helps. Hang on. Wait for it. Wait for it. Page, manage pages. Okay, let me refresh the database here. Wait for it. Let me refresh. Remember, this isn't a web page. We're actually logged directly into the Google Cloud. So this is generated by the database. Hang on. Oh. All right. Let's see. Oh, somebody added something. Do we want to look at that? No. Interest rates? No. These are just tools I'm working on here. So you take out Japan, reloads. See, isn't that cool? Add Japan back. Boom. Inflation. Is any of this going to be helpful, let's say? Let's zoom in on more recent. And it shows you inflation levels across the world now. Okay, still a lot of inflation in Germany, huh? Crazy. Oops. What if we only did the United States? Let's get rid of New Zealand. No, let's leave New Zealand. No, we'll take out New Zealand. We'll leave Germany. We'll leave Great Britain. We'll leave Euro. We'll get rid of Switzerland. We'll get rid of CAD and Aussie. And update this. Cool, right? United States is in the best situation. The US is winning because it's lowest. Isn't that pretty? Let's compare now instead. Let's compare inflation between New Zealand and Australia. Okay. Amazing, right? New Zealand is slightly better off, but remember they have different policies where the RBA might be raising interest rates, the Kiwi might be paused, therefore the Kiwi is dropping and the Aussie is rising. Huh? So therefore that will impact future interest rates. So we can compare okay. New Zealand is higher, but they're pausing. Australia is lower, so they have to rise, and therefore, relatively speaking, Aussie is more attractive than Kiwi. Isn't that interesting? Nice. All right, so let's go to the dollar pairs. In particular, let's look at euro. Have I told you that you're my euro? All right, let's take a look at the euro. Nice little counter trend bounce. Oh, I wish I did my little experiment. I was going to buy and sell just based on range trading, but which worked actually. It worked out really well. Dang. Okay, so anyways, we'll have to pay attention to the number. Oh, construct, you're logging in to follow the live stream, but you don't like me? Why do you do that, construct? Yeah, interesting, yeah. Like Jim says, yeah, to each his own, but I'm just doing fundamental analysis. Like I'm just interpreting data. Can't be too dangerous, right? Oh, I thought you said you did better when you stopped listening to me. So I construed that as negative. Oh, okay. Cool. All right. So anyways, top, down, 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 down. So the thought process, if we're going to do an if then, if, let's say, plus 250,000, then probably something like this. Okay? Or if, okay, less than 200,000, not negative 200,000. So it's like greater than, equal to, or less. So let's say less than 190 or whatever, less than 200,000. That's good news. The Fed doesn't have to raise, and we look more like that. Okay? That's sort of the thought process. Okay, so would somebody please post the number? It should be coming out. I'm going to pull up the actual database or the actual release. By the way, thank you for being here. 206 months is pretty awesome. Thank you for, making this so cool. Okay, April job opening up. Ooh, look at that. Really? 339? Really? Wow. Okay, let's just play around with this. That'll be interesting. Let's drop, no, we'll leave here. Let's just go into a smaller time frame. And one would assume down in this situation. Okay. Yeah, well, that's the thought process, right? Is there another rate hike coming? So I've already explained all that, but I'd like to bring that up. Yeah. Slight change, nothing dramatic yet. So we'll keep, what was it, 22? Now it's 25. So yesterday it was 20, now it's 25. Okay. So, yeah, so it's interesting. If you added 300,000 jobs, how do you have how can the unemployment rate increase? Anybody want to answer that? Danny, I wrote an entire document on how to handle all of this. So I'm assuming you've read all of that. I think it's on your registration page when you signed up. I gave the initial scalp trade. I gave the counter trend trade. Okay. So I'm assuming you've read that document. Yeah, a higher participation rate. Yeah. No, more people are looking for jobs. Because once you start looking for a job, you're unemployed. If you don't look for a job, you're not unemployed. Okay? So in the macroeconomic course, I think it's the macroeconomic course at FX Bootcamp. Again, probably 15, 16 hours long. We break down the various definitions from the Bureau of the Bureau of Labor Statistics, the various definitions of unemployment, right? Full employment, like, is your unemployment transitory? Is it not transitory? Like, there's different definitions that go into these calculations. So you might want to look at that, right? Yes, at FX Bootcamp, yeah. Right, like if I bring that up, just the home page. I'm locked out because my membership's expired. But I'm talking about this course here. Okay, it's 12 hours. Okay, it's a 12-hour course that, by the end of it, you're really handling pretty advanced economic concepts. I mean, it's a university level course for people with no economics experience. But all of a sudden, by the end of this, you're going to be looking at the long run aggregate supply and whoa. and you're shifting curves and stuff, yeah, you're going to get it. So anyways, yeah, people have entered the workforce. So 300,000 jobs were added, and yet the unemployment rate went up. Is that right? Did I get that right? No, it's the other way, right? Or wait. Hang on. Wait, did I get it backwards? Too much information happening too fast. Please clarify. Where did my... See, I can't think and talk at the same time. What happened to my Bureau of Labor Statistics page? Oh, there it is. Oh, that's what happened. Okay. There we go. Yeah, it took a long time, huh? Yeah. So this is actually it. This is the actual report. If you try to get the non-farm payrolls report, you won't find it because it's not called the non-farm payrolls report. There is no report called non-farm payrolls. Okay, this is the employment situation report. There's two surveys, the household survey and the establishment survey. Here it is, the establishment survey. One is for homes and one is for businesses. They're two different reports. So the unemployment rate went up, although hundreds and hundreds and hundreds of thousands of people got jobs. So it's kind of like 600,000 people decided to get a job this month. Half of them got a job, half of them didn't. Okay? So those Facebook people found jobs at some other lame-ass company. Okay, so somebody, 10,000 people got laid off at Facebook, and now what? Now they work at what? Insert useless tech company name here. So anyway, so people moved. Okay, the number of job losers and persons who completed temporary jobs. Oh. Favor says, hey, teaching economics, you said which one to join how? No, they're all included. They're all the courses, 88 hours for $88. They're all included. You get them all of them. It's not per course. It's not per month. It's per year. I know, it's stupid. All right, the number of persons employed part-time. So they're, right, underemployed. 3.7 million PhDs bagging groceries, pumping gas. Okay? These individuals who would prefer full-time jobs are working part-time. Okay, the PhD bartender. Thank you, Construct. Yeah, I honestly believe I could charge $1,000 in good consciousness for the courses. Yeah, I honestly believe I could charge $1,000. I charge $88. That's why I don't drive a Lambo. Anyways. The number of persons not in the labor force who currently want a job was 5.5 million. Now that's interesting, right? The number of persons not in the labor force but want a job. What does that mean? They're not looking for a job. So good luck with that, 5.5 million people. They want somebody to just knock on their door and say, hey, stop playing, put down your PlayStation controller and come work for me. I'll pay you money. I'm like, no, dude. Okay, anyways. Well, Visible says, I don't know if, I don't really actually want a car like that. I have no aspiration for that. I've owned at least 200 cars. And that's not really what defines me. I don't think I'll ever buy a Lamborghini. But I can tell you what I am excited about. I am starting a new fund for accredited investors only, but it's a new path for me. It's something to do for the next 25 years. It's another way for me to give back to society. So I'm going to take care of people, their money. I'm going to help retired people live a quality life and ensure that they don't run out of money. So I'm going to manage money for retired people. Step one, get you rich. The second thing, help you live wealthy. So anyway, so I'm really so I'm going through all the legal work. I have more lawyer meetings coming up and doing all the paperwork, and I have to file with the SEC, and I have to have the onshore company and the offshore company and all that kind of stuff. But I'm super excited about doing that for the next 25 years. I like that kind of stuff. J-Man says, good time to buy a Porsche with inflation going up. No, not yet. No, not yet. No. You want to buy when NFP is negative. Okay. What does a trading guru like you want to buy? I can't think of anything that I need. I don't have a want in the world. So, except I'm excited about starting another business and running another fund and having it define who I am for the next leg of my life. But, yeah. Ansa says, what about prop firms? I don't believe any of them. I don't know any of them, but I believe they're preying on poor people and desperate people. Yeah. But if you are a prop firm and you are legitimate, come talk to me. If you're a legitimate prop firm, maybe I'll help promote it, because there are lots of people that are trying to develop skills but have no money. But here's the thing with these prop firms. They ask people with no experience, no education, no track record of success, and they're like, look, we'll give you hundreds of thousands of dollars. I don't believe it for a second. It makes no logical sense. Oh, well, you just have to pass this and have to pass that. You know, pay some money to pass these tests. It doesn't make any sense. It makes no logical sense whatever. So I can't even understand the business model. Like, think of it again. Let's repeat it. A company gets together, puts millions of dollars into a pool, and gets people with no education, no experience, no track record, no money of their own, and have them manage the millions and give them most of the profits. It doesn't make any logical sense at all. So no, I don't think they're legitimate. No, it's just no. So whatever. And so what you do is you trade profitably, ideally with real money, and ideally with other people's money. So friends, family, and fools. You trade consistently for 5 years. And over the course of 5 years, you show low volatility and consistent returns. That match the beta, which is risk adjusted. Okay? Okay? There's a lot of money in the world. There's a ton of money. But you have to know the talk, the lingo, the walk, and you have to provide more value. You have to have a functioning business. Anyways. Okay, so we made the next leg down. No, Anza, you would have a trading account that gets audited by an accounting firm that certifies, right? And then there's a lot of other things that could go into it. I think ultimately people will invest into you as a trader because they like you. But they won't know you until you get into a room with them. So how do you get in a room with a potential investor? There's a couple of things, really. You're a track record. Yes. Does pedigree help? Yeah. Some people will talk to me. They don't know me from Forex. They don't know me from these live streams. They don't know me from YouTube. They don't know me from my book. They don't know me from anything. But some people will talk to me because it says, I have a bachelor's degree from Harvard, a master's degree from Harvard. I studied alternative investing at the Harvard Business School, cryptocurrencies at MIT, and algorithmic trading at Oxford. There is absolutely, for sure, people wanted to talk to me only because of that. Because people ask me a lot, does it matter? Yeah, it does matter. It does. The second thing is usually people know me from, right, being public. Right? As Grant Cardone says, if you don't know me, you won't flow me. So people are like, oh, that YouTube guy, I want to talk to him. And then what comes up in the conversation? Then the pedigree comes in. Great. Then you show the track record, and then you're good, right? That kind of stuff. So you have to put in your time. So I would say if you're going to be serious about being a professional money manager, you should have a 5-year track record, some level of education and knowledge, and you do something in which you can borrow respect. Okay? So I gave an example of how to use affinity groups to borrow respect. For example, joining a club and becoming a leader in the club. Then people know you from your leadership role in the club. And then they say, oh, so what do you do? You're like, oh, well, I manage a Forex hedge fund. Really? Tell me more about that, okay? So you might not have the education, but you're on the executive board of the local country club. Okay? And they know you from that. So how do you do that? Go to your local country club, become a member. And it's one of these things, like, but I don't have any money. It's going to be very difficult to talk to rich people if you have no money. Now, if you scrape money together and somehow become a member of the club, they don't know that you're still dead broke, but you're a member of the club. Okay? Then you get into the club and you contact the membership manager. And of course, they don't want to actually do any work because they work at a country club, for crying out loud. Okay? And you say, look, I want to start a group. I want to start a whiskey and cigar group. And I'll take care of everything. I'll arrange for the whiskey tasting. I'll purchase all the cigars. And I need you to promote it to your members that the first Tuesday of every month, or the first Wednesday of every month, we're going to get together. The fee will be $100 for the event, and it'll include a premium glass of whiskey and a premium cigar and a presentation about both. And I'll lead the whole thing. I'll do the whole presentation. I'll take care of everything. Okay? Now, if you did that for 5 or 10 years, you're like, 5 or 10 years? Hey, I've been doing this webinar for 20 years. And some of you know me. Why? Because I've been doing this. So imagine for 5 or 10 years at the country club. Now, you still might not be rich like all the other members of the club, but somehow you got in. And maybe because of this, they give you a discount. I don't know, but somehow you're a member. And everybody knows you. Everybody knows you. And they like, if you're, assuming you're a whiskey and cigar guy, like I'm a whiskey cigar guy, right? And wine. And, right? So let's say I started that club. Who shows up? Members of the club who probably are rich, and they love things that I love. And I'm in front of them every day presenting the best whiskeys of the world, the best cigars of the world, and I have charisma and passion. And all of a sudden, after doing this for years, they're like, they know me. They look up to me, and then we're smoking cigars. They're like, Wayne, you're a hell of a guy. What is it that you do for a living? Oh, I'm an emerging foreign exchange hedge fund manager. In fact, after the last 5 years of developing my track record, we are now just accepting new outside money. Really? Tell me more about that. You're in, man. They already like you. Now your track record, if you show them a track record and it says you lose money every year, it ain't going to happen. But most certainly, it's their first Forex investment. They don't know jack about anything. So they're like, dude, I like you, and I like the idea of putting some money into a hedge fund, and I like you and money and this. Yeah, I like it. Let's do it. Boom. They're not going trade by trade by trade. They're not looking at your Sharpe ratio and they're like, can you do a Sorrentino ratio as well? They're not thinking that way. That's institutional. When you're just talking to rich people, as most poor people know, rich people are stupid and lazy. So they'll invest in you because they like you and they got extra money and it doesn't matter to them. They have a house, they have a vacation home, their kids are in college, they already got a couple of cars, their Mercedes 10 years, 15 years old because they don't need a new one, they don't care. But you know what? Putting some money into a new Forex guy, especially a guy at the club you really like and admire, not a problem. They're like, oh, I'll give you 25K. And you're like, sorry, 30 is the minimum. Oh, okay, 30. Boom, done. Enough said. Okay? Yeah, so you have to know how to do stuff like that. Yeah. Oh, but finding money is not difficult. But for all you guys that need to do it fast, you're choking on your own dream. If you want to get rich quick, it's a fool's errand. You should be focused on building and creating value. Okay? You need to start thinking like a small business owner. Your job is to create value, take care of your customers. Okay? Build a sustainable business. There's nothing about getting rich quick that's sustainable. If you want to get rich quick, become a drug dealer or a prostitute or a bank robber. Those are probably the three best ways to get rich quick. Probably spend your life in jail. But whatever. Okay? It's easy to make money when you take your clothes off. Have fun with that. You do you. I would rather run a small business that's sustainable, built on creating value for others. Okay? And it's not a complicated thing if I say, well, right? Anza, here's 80 cents. I'm going to keep 20. And then tomorrow I say, Anza, here's another 80 cents. I'm going to keep 20 cents, right? So you get 80 cents, I get 20 cents. How long do you want to play that game, Anza, if I do all the work? You pony up some money, I do all the work, and every day we have a meeting and I'm like, Anza, here's another 80 cents. By the way, I've kept 20 for myself. How long do you want to play that game? Oh, I made $1 today, Anza. Here's 80 cents. Here's 20 for me. Next day, Anza, 80 cents, 20 to me. How long do you want to play that game? Okay. Okay. Yeah, you'll get sick and tired of it, right? Yeah. So anywho, yeah, let's move on to some commodities. You're dying in a year? Oh my God, Anza. So sorry to hear that. Okay, J-Man, okay. Oops. Okay. Do you guys remember when I said it comes out 300,000, gold falls? How many people remember that? And then we'll switch over to silver. How many people remember that before the news came out? I drew, if it comes out 300,000, gold falls. Dollar gets strong. Euro dollar falls. Bitcoin falls. Anybody remember any of that? Shakir says, Shakir purchased somebody's premium signal, but only have a 30% win rate. What a garbage premium app. Yeah, who are you talking about? Yeah, I would never listen to anybody else. Yeah. Okay. Okay, good. You do remember. It also shows me there's quite a lag in the stream. All right, so on the hourly, it's still bullish, but maybe it's time to head around. But we had a question regarding silver. Okay, not radically different. And you have to remember, I'm a macroeconomist, so I would assume the similarity. Okay, so let me delete this out. Okay, up, 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 down, down, right? Up, 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 down, down, buy, up, up. So if you're going to trade purely technical, this is your next move, okay, on the hourly. Why is the stock market not falling? Well, first of all, it's not open right now, and B, it fell all day, Luis. So it's, you know, how do you say it? Buy the rumor, or in this case, sell the rumor, buy the news, maybe? You have to look beyond the sort of instant reaction as well, as kind of part of the advice. Going farther out, or further if you prefer, okay, you want to put everything into context. Delete. Let's do this. Let's do this. Let's do this. Okay. Okay. So the higher it goes, the more you want to sell it. Okay. Shakir never said it. Shakir, what service are you talking about? So it's like 24 to 25 looks like a logical sell zone. I'm looking at this top and this bottom in my analysis. Let's take a look at, add some new data to this. I'm going to leave it as bearish. Go to a 4H and look at it from this point of view. So $24.78, okay, right here is the best selling price of the month. Best sell for June. For silver. What do you think of that? Okay. The first, okay. So the base sell. Base sell. Remember, nothing here tells you to be a bull or a bear. That's your job, son. So the base selling price for June is 24. And we're approaching 24 now. 24.07 to be specific. So you have the best sell and you have the base sell. Okay? Okay? See it, Peter? So how do you handle this? If then. Pop quiz. Who invented scientific methodology? Look at you guys. Bacon! Bacon! Bacon, 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 bacon. Yeah. So you start with the hypotheses. Hypothesis number one. Using a different analogy. Are you ready, willing, and able to sell at 24? So you drop into a Cinco, drop into a Fiver, and you are RWA on the sell side. What's your trigger? That's your only job now. Around the price of 24, you decide to sell. So, when do you know? Well, isn't that your job? You don't know how to pull the trigger? You can use price action. You can use moving averages. You could use oscillators. No, because flipping a coin only gives you direction, Simon. It doesn't tell you when to pull the trigger. So you've already flipped a coin. You're already a bear. You're not making decisions of what to do on this, right? What's the plan? Sell near 24. So you already flipped a coin. You've already done that. So you know the price. You don't know the time. There's only two things on this chart: time and price. J-Man says, so what does this monthly pivot at 24 tell us? Resistance. It's resistance of market. Okay, that's it. Has nothing to do with price. It has to do with the market. It's market resistance. So now you are in the mode of deciding at what time. Do you want to sell it now? How about now? How about now? How about now? Now? How about now? Okay. Mayor says 24.50. That's not the question. You're not following along. It's an if-then statement. If you're going to sell at 24, then what will make you sell it? Is it a 5-minute chart or is it a 15-minute chart? Okay. For example, you could treat this like double top, lower low. You're assuming a lower high, and your trade plan could be you're about to drop it. Okay? Now, what about 24.50? That's not even a concern. Why are you worried about that? We're nowhere near that. What does the pivot come from? Okay, we measured the high of May, the low of May, and the close of May. Why do I measure the close? The close is equal to sentiment. Okay, at the end of May, was the market bullish, bearish, or neutral? Does that matter? Yeah, it matters. If you just did the high and low, you just get an average price. Is that even relevant? So the close, when you do high plus low plus close, divide by 3, you get a weighted average. Weighted by what? Market sentiment at the end of the observation. So like, let's say May started bullish but ended bearish. Would that matter to you for June? You're like, yeah, we were bulls in May, at the beginning of May, but oh my God, now the whole market's bearish. Well, yeah, that would probably influence price action in June. So what is the central pivot? Tell us. That's the weighted mean, the sentiment adjusted average price. So if June closed bearish, if May closed bearish, you might have a slight leaning towards bearishness for this market. And you might say, in the month of June, silver may fall because there's more of a bearish sentiment to this market. So you would expect, even in a period where, let's say, for 3 or 4 days silver goes up, but you're like, yeah, the more it goes up, the more I think it's going to fall by the end of June. And what you're doing is you're doing something like this, which is a downtrend. Yeah, you're bearish. And we might be in here. That might be the central pivot. Okay? And this might be the M3. So you're thinking somewhere between those areas, probably resume its downward trend. That's how you'd play that. Okay? You know what this gray zone is? The projected low for the month of May, calculated on the 1st of May. Yeah. So what if you thought this was going to continue? Strategy A, strategy B. Simple. Simple, guys, simple. Easy peasy lemon squeezy. Isn't that nice? See ya, Grace. Yeah. So anyways, yeah, super nice. Yeah, so I'm starting a fund. I'm not soliciting yet. But if you have at least $1 million, let me know. Wayne at FXBootcamp.com. We can have a conversation. My models are producing 40% less volatility than the S&P 500 and producing about the same results. But the upside is in cash, not paper profit. So I think it's like incredible. The other thing I'm starting and have started, I've written 50 pages. I'm starting a series of books. The first series, one is on technical analysis or technical strategies, fundamentals, and the third one is on trader psychology. Then I have plans to write 2 or 3 books in a series, basically on economic history, but much more interesting than that. You're like, how boring. So like we actually have this. I found this the other day. I was looking at, and I found this. I wrote this down years ago. Right. So I'm gonna write about Darwin and Gauss and Ricardo and Locke and Smith and Newton and Einstein and Freud and Marx and Machiavelli and Bacon and Lewis and others, Gandhi, for sure, many other people. So I'm going to write a series of books about economic history, just out of, I'm interested in these things. So this is what I do for a hobby. I don't like watching TV. So I'm going to write books. So start the fund, write a whole bunch of books. So then there's a 7th book now, because I think that's going to be 3 books. And then I have an idea now that I want to do for a 7th book. I can't really tell you what it is, but let's say it's I don't want to say. Anyway, so it's interesting. It's interesting. And then the 8th book is going to have to do with the retirement accounts. So I'll probably write that one 4th. The 8th book I'll probably write 4th. So that should be interesting. I'm going to teach people how to prepare and live in retirement. Prepare for and live in retirement. So think of a book designed specifically to tell people how to get rich and retire wealthy. And it sounds like, well, it sounds like it's what it sounds like. Like how to get rich and retire wealthy. Yeah, but actually, by definition, that's really what I mean. How to compound while you save, how to compound your savings so you have a huge asset to retire on. And then when you're too old to work and it's time to retire, your money will pay you till the day you die. And when you die, you will have all the money you saved during your entire life. That's my goal. That every penny you've saved during your entire life, you will still have when you die. Meanwhile, you will live out your golden years in the sweet life. And you'll never touch a penny. And that, to me, is the definition of wealth. Your money works for you. You stop working and your money starts working for you. And that's what I want to teach people to do. And if I don't end up managing your money, that's okay, because I'm still going to tell the whole world how to do it without me. So I will write that as well. So I'm really looking forward to that. Like, it excites me. Yeah, Kevin, would I do an audiobook? Yeah, I foresee that, sure. I haven't done one. I think that would be fun. Okay, Simon has a question. Let's dive into this question that Simon has. What does macroeconomics long-term say as opposed to what the 4-hour daily say? The big problem today is Biden signing a debt ceiling for the next 2 years. Well, there's a lot going on there, so let's unpack this. The debt ceiling, all it is the United States is going to continue selling treasuries. That's it. Did it solve anything? No. Did they fix anything? No. I mean, it was nothing. They all agreed that the United States is going to sell more treasuries. So nothing actually happened. We're just going back to exactly what was happening before. So the whole thing was a total waste of time. Complete nonsense, complete garbage. Nobody has fixed a thing, addressed any problems. Sell more treasuries. Yeah. So what is a treasury? It's debt. Debt ceiling. So now they can sell more debt. They can sell more treasuries. J-Man, that's all it is. So yeah, good. The government's going to sell you a 10-year T-note. They're going to issue more 10-year T-notes. Good. Amazing. Okay, amazing. Okay. So let's go back to Simon. Simon, let me know that you're listening. I'm going to ask you a question. So what does the macroeconomics long-term say versus the short-term? Well, you're not giving me a topic, like say about what. But let's address long-term versus short-term. Okay? Macroeconomics is very much, how you say, factually based. It doesn't tell you what the market is going to do. It tells you, like QuantBox, for example. Let me open this up. This is a tool of mine. And it gathers data. Let's not use gold. Let's do Aussie yen. Let's just pick Aussie yen. Okay. What is this doing? Let me zoom in a little bit. Okay. All right. QuantBox does this, and this is macroeconomics, by the way. It gathers information about Australia, looks at GDP, inflation, unemployment, and interest rates in Australia, and the change in GDP, the change in inflation, the change in unemployment, and the change in interest rates in Australia. But then it gathers the same data, GDP and the change in GDP for Japan, inflation and the change of inflation in Japan, unemployment and the change in unemployment, interest rates and the change in interest rates in Japan. Then it compares and contrasts the two. Meanwhile, it's scoring whether this is good or bad. It's looking at the interest rate differential. Okay. It then logs in and gets the COT data, institutional positioning long for the yen and short for the yen. Institutional positioning long for the Aussie, short for the Aussie. It does its calculations. Okay. Total volume minus hedgers minus hedge funds, okay, equals a number, and that number is non-institutional open positions that are speculative, which is what we call retail. So we gather all that and say retail short this pair, and we can look at whether institutional is long or short. Turns out institutional is both short both yen and Aussie. So it's already mediocre. We'll look at the price action. Pretty mediocre. Okay? Mediocre, but slightly up. So we also look at that. QuantBox looks at the technical trend of this pair. What does the technical analysis say? It also looks at what this pair does month over month over month over month over the last 5 years and over the last 20 years, and what's happening now. Does Aussie yen typically go up in June, or does it typically go down in June? And it looks at all this information. It takes the information and it scores it. Who wins on COT data? Nobody. See? They're both short. They're offset each other. It's not a good pair to trade based on analysis of institutional positioning. What about retail sentiment? Retail short And we don't like that. Okay? Taking a look at Aussie yen, we see that retail traders are 20% long and 80% short. We consider this information most useful when a market is at an extreme reading from retail traders. If the retail crowd is 60% or more positioned on one side, they get a +1 or a -1. Currently, the Aussie yen gets a reading of +1 in this category. Remember, if the retail crowd is very long, we look to short and vice versa. So they're very, very, very short. So we say, you know what? That's dumb money. We want to be long. And so, look at that. Aussie wins. So when you look at COT data, nobody wins. Retail favors Australia. Seasonality favors Australia. Technical trend favors Australia. GDP favors Australia. Interest rates favor Australia. Unemployment and inflation. Look, we know Japan has very, very low unemployment and no inflation. And they're not raising interest rates. Look at this. Interest rates still negative in Japan. All right, so they win on that aspect. But the bottom line is that only makes this pair more likely to go up than ever. The problem with this pair, as you can see, is that for whatever reason, we don't have enough people long the Australian dollar. If now that changes, this will go up. So I'm answering the question about the markets versus what should be, let's say. This is factual stuff. This is real hard data. And quantitative analysis of this macroeconomic data would lead to the conclusion that Aussie yen should go up. But it's not going up much. There's something going on in the market with Australia. People don't want to own the Australian dollar. Maybe they're waiting for data on the Chinese reopening. Okay? But if that changes, this could be a very nice asset to own, just not now, because institutions are 2/3 short. Now, what would explain that? Well, typically, you should buy this asset class here and run it up and take profit before May. Whoa, what? Okay, you should take your profit, sort of that at the peak of May, go away for the summer, come back, buy it maybe the 3rd week of August, and this should be right as rain. Oh my God. Oh God. So this is good. And so the question is, why isn't the Australian dollar behaving as well as one would think? And that's kind of, I think, what Simon is saying. On the long term, this might be. Now, if any of this data changes between now and then, well then, yeah, this will change. This updates several times a day. Okay? But one would think normally you would buy this asset at the end of summer, and if all things stay equal, it might be pretty good. So now we're like, yes, maybe this is a buy, but not necessarily today, right, Simon King? So you might say, well, today, let's say daily and 4-hour are still not great. Okay. By the way, this updated at 8:22, it's 9:29. So all this data is less than an hour old. Pretty cool, right? So this is the point, right? Simon King. There's strategy and then there's tactics. Okay? There's the economy and then there's the market. there's two different things going on here. And the market very often is thinking 6 to 12 months in advance of the economy. Where we are now isn't always relative or relevant. What's most relevant is not non-farm payrolls today, and it's the Fed meeting, but not even the Fed meeting in June. We're more interested in the Fed meeting in September. We're more interested in where interest rates are going to be in the United States in December. And the market is trying to figure all this out. We know the economic data. Now, QuantBox does a good job of doing it automatically and then helping you, compare and contrast. But ultimately, there's still a market. So if, like, for example, QuantBox says buy, it doesn't mean you buy it. It means if you see a bullish setup on your charts, you could consider buying it and managing the trade. So, like, imagine 2 days ago, after days of down, you were interested in buying it because QuantBox was helping you do the economic analysis. It's not right. It's not even smart per se. It's just gathering the data for you, interpreting the data, scoring the data. It's not thinking, it's just scoring. And then saying, hey, dude, did you know, like, logically this should be going up. It doesn't mean it will be. Just logically it should be going up. So now that it's been down for a few days, maybe you should be looking for a reversal in a small time frame. So now, again, Simon says, well, what about the 4-hour versus daily or bigger? Well, that's how you'd use this tool. You would have had to have waited for weeks to buy the dip, but you knew to buy the dip. And so you knew that somewhere in here, on a smaller time frame than the daily, so a 15-minute chart, an hourly chart, you observe something that looks like a double bottom. Higher high, higher low. You take the shot, you drop the stop, so you're in here, you put your stop there, you let it run, now you jam your stop at break even and your target is here. And you have the strength to let your winners run. Okay? Would anybody like to see this in action? Two ways to do that. But more interesting than that, I want to teach you how to do it yourself. I want you to go to this link. Is it going to let me? Okay, free webinar, 3 trading secrets that may triple your profits without changing your indicators and while spending less time at your charts, and how to do all 3 trading secrets for free. I mean, seriously, you should watch it. Okay, so hopefully that answers your question, Simon King. Okay, let's take a look at the stock markets around the world, see how they're reacting. Up and down and down and up. Wow, yeah. So S&P and NASI love it. they're interpreting it differently than what I would have done. So I guess what they're saying here, because I think this should go down. They're saying what? The economy is going to be resilient and there's going to be a soft landing, I guess. But I would interpret it like the Fed's going to need to do more. So this might be suckering in dumb money. And by the end of the day, this is a hard down. I'd be careful here. Let's go back to, let's look at the facts. I don't care. You shouldn't care about what my opinion is. But my opinion is this shouldn't be going up, but whatever. Now it's even higher. So, okay. I want you to look at this. I'm trying to share logic. As this goes up, remember it was 22, then it was 25, now it's 27.5. This is smart money. This is banker to banker. This is not futures contracts. This is not speculation. This is bankers negotiating with bankers. Trillions of dollars. And as this goes up, the US dollar is likely to go up. So you might want to watch this tool and watch this in real time. By the way, I'm spending some money to build this into QuantBox, or at least something like this into QuantBox. Something let me just call it like a central bank analysis tool. Okay? So watch that. As this goes up, or let's say if this goes up, then the value of the dollar goes up. And you might want to like, let's do this one. Okay. I might look for this today. Up, down, up, down, up, down. So down today? No. Let me tell you something about myself. If we're doing something today, it's for tomorrow. In this case, that's Monday's trade. So I don't know if that's going to happen, but that would be the plan. Huh? Hey, by the way, did you click the thumbs up button and give some love to FX Street? Show some respect to our moderator. Make sure you do that, okay? Be nice. Come on, be good. Okay? So for that to work, you would want NASDAQ down as well. Let's take a look at some other commodities. Okay. Bitcoin down, not down, but also not up. Cool. No, Simon, no. If the S&P 500 goes down, gold goes down. Okay? If you're selling the stock market, what are you buying? Don't say bonds, because you'd have to then, that's a second step. What are you buying before you buy bonds? When you sell a stock, what are you buying? Because if you sell something, it has to be converted into something else. Into money. Dollars. Yeah. Okay, so if dollar is strong, okay, based on aggregate demand, okay, so if, oops, AG, aggregate demand, AD, based on aggregate demand, if aggregate demand falls, that's for the stock market, okay, that's for gold, probably oil, probably even real estate. What does it all mean? Aggregate demand means the demand for everything. And that's a macro issue, aggregate demand. So micro is the study of a corporation, for example. How does a corporation manage its production and its people? How does it interact with its customers? How does it compete with competition in the marketplace? So how does it interact with the marketplace? Aggregate demand is everything. So for example, I would study all of this stuff to say a recession is coming. And it's going to hurt the corporation no matter what it's doing on a micro level. Its ability to manage its inventory efficiently might be a strength of its, competitive strength. But if people stop buying, it's still going to have high inventories and low profits. Okay? So I'm focused here. And so if the stock market is falling, I'm going to think on the aggregate level. And if the stock market is falling, the value of all assets are falling. Cool. All right. My WTI. This goes to an old plan we were talking about. Okay. When was it? Tuesday? We had a member that wanted to sell this. And I said, well, the only way you can sell it. Okay. And by the way, we do this Tuesdays at FX Bootcamp, where we get together, people post their trade plans, and I go through people's trade plans with them in a group setting. And so we had a member that wanted to sell this, and we were about here at the time. And I said, well, if you're going to sell, you have to sell high. And then we looked at a whole bunch of different charts on a whole bunch of different time frames. And then I identified that somewhere around here, this price here, I had a dip. This is called an Arctic turtle. But at this part, the dip wasn't necessary. The idea was, we get down into this price. Okay. I think the number was 65.5 or 66.5, I guess. But anyway, so down to this price. And then I would expect this to go up. So I said, well, you can't sell here, but you could sell here, but I expect to get in this area and then take it up. Okay, and then you back out, and you can see I tried to predict the future. I drew all this back on Tuesday. Can anybody confirm all of this? And you can see how I picked the number. There's actually another one to the left. So it's actually a triple bottom. So you can see I had this price support, but I'm trying to get market support too, and then play it off that line. Either way, we're playing that line. Can anybody confirm that? Yeah, well, JGB, I think it was your trade, wasn't it? Yeah, yeah, it's JGB's trade. Cool. So if you'd like that kind of feedback like JGB got, okay, I went through, how many trades did I go through? 6 or 7? You have an opportunity to do that at Bootcamp. Yeah. This is what we do. This is how we do. Yeah, cool. Yeah, this is pretty amazing. Let's go. Where's my QB? Boop, 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 boop. Yeah, oil is still the biggest. I mean, it's a huge outlier. Everything is almost, well, here's the interesting thing. This is, actually, this is quite rare. Half the market, so where's this? Let me get a vertical drawing tool. Okay, here we go. Half this market is out of position and the other half is in position. Holy smokes. Holy smokes. This is interesting. This doesn't line up fundamentally. This does line up fundamentally. So I would spend my day to day looking at all these assets and try to discern, has anything fundamentally changed, or are all these things out of position? Meaning your next trade will be one of these in the circle. You don't want to do these trades because they've already happened. They're already working. You should have been in these 2 days ago. Like I showed you on Aussie Yen. Dude, you knew that weeks ago. Now that it's up, you want to trade it? Dude, what are you doing? You have to be ahead of the curve, not behind the curve. So all these things are working, but we already know that, and it don't matter none. So it's these. What's going to happen here later today and tomorrow? That's where I want you to focus. Okay? And again, has something fundamentally changed? Or is it out of position? And really what that means is these are all sells. All these things are up right now. And the higher up they are, okay, the more they're over in here, let's say. You really want to focus, right? It's sort of like you want to look at high and you want to look at wide. And these things might be, so oil relative to certain fundamentals might be a good bear trade, but you don't just blindly trade it. You should look at it technically. And then like Aussie dollar, Bitcoin, Euro dollar. Okay. Okay, they're up today, but they might be a great sell later today or tomorrow. We don't know, but we know to look at it. So let's go to Aussie dollar. Okay, and you look at it, and should you sell it? No. Okay, but up here it's 66.5 to 67. There might be a good sell coming. So I might have a Monday, Tuesday trade setting up. So this is strategy. So now the tactics is, if we get up near this area that I just highlighted, so let me do here, right? If we get somewhere up in this zone, I want to sell, or I want to look to sell, and I'll drop into like a 5-minute chart and I'll sell the 2155 cross down. That's tactics. Does anyone remember the name of my book? Oh, Strategic and Tactical Forex Trading. Hoo-ha! So I've already done that for you. Nice. So we have a high, a low, and a breach would be technically interesting. We have a range. Favor says, we have an OPEC meeting Sunday. Yeah, they're going to shock the world and cut production. That's why oil's up, by the way. How many people knew that? A week ago, I think exactly a week ago, I started telling people that Saudi Arabia is going to push up oil prices in the June meeting. That's not quantitative analysis, by the way. So that's outside of QuantBox. So you might want to have that as part of your analysis. QuantBox does quantitative analysis of macroeconomic data. Okay? So part of what's going on here, and part of the reason I had this going up, remember, this discussion on JGB's oil trade here took place on Tuesday. And on Tuesday we said, well, with the upcoming OPEC meeting, this has a high probability of going up off of obvious support. That's not quantitative analysis of macroeconomic data, but it is knowledge of the oil market. Can anybody confirm that? At least a week ago. That my opinion is that Saudi Arabia is going to attempt to push up oil prices. Can anybody confirm that? And then I'm going to ask you, okay, why did I think that? Where did I get that information? Remember, nobody cares about some BS guess. Does anybody? If you don't remember, type in a question mark. If you don't know and you want to know, type in a question mark. So either tell me the answer or type in a question mark. Don't be a lurker. Yes, I believe it was the Minister of Energy for Saudi Arabia. Yeah, I don't think it was the OPEC minister, but I think it was the Minister of Energy. Yeah. And as a correct, exactly, actually warned against short sellers. Yeah, not the oil report. No. Because remember, the oil report tells you what happened in the previous period. What I'm trying to do is predict the future. So this was trying to predict oil prices 2 weeks in advance. So let's thread that. So I get this information here. So in this area here, I get that information. That's step one. Step two, I buy at support because that makes me bullish. Where is support? Let's go out to a higher time frame. And I say support is based on, see this wick right here? See that one? And I drag it all the way across. And I say, okay, somewhere around 67, I want to get long. Because to me, that's support. So step one, define a strategy. Step two, the strategy is buy at support. So where's support? Step two. And step three, what's the target? Does anybody know the target? Frank, the United States is pumping more oil than they ever have in the history of the United States. Okay, the target is $78.60. Okay? Okay, 67 to 79. So you just call it 80. Okay? So on Monday, I discussed it. Tuesday, we set it up, technically now, not fundamentally, but technically. Now, Friday, we're at 72, on our way to 80. This is what we do at FX Bootcamp. J-Man says, J-Man sees targets for 60. Okay, so now you have to override what I just talked about. And you would need to observe a reversal at this price. Okay, or this price. Okay. Okay, I suppose a third thing could be okay, but J-Man sees a target of 60 despite the Minister of Energy laughing at Americans who are short selling oil. So I don't know if you're American, J-Man, but the Finance Minister of Energy for Saudi Arabia specifically said that if you're short selling oil, you are going to be punished. Actually, he said you are going to lose. May 23rd, Saudi Arabia's energy minister warns short sellers not to bet against OPEC. Huh? May 23rd. So actually I knew it a little bit even before that. Oh, paywall. Short sellers, oil short sellers better watch out, Saudi energy minister says. All right, so maybe, I don't know if FXStreet has this. Okay. So anyways, Google it. And I guess we'll wrap up today's session and end with the stock market, where this is where we started. Okay. Let me ask you, did I warn you? I saw giant green candles on the screen. Giant green on the screen. Did I warn you? Did I say I don't think it's going to last? Did I say I think this is going down? Did I say that maybe it's just dumb money? If so, click the thumbs up button and thank FXStreet for hosting us. I'd like to thank you for 3 hours of your time. I'd like to invite you to try QuantBox. I'd like to invite you to try FX Bootcamp. I'd like to invite you to try Trader's Way. I'd like to invite you to try FXStreet and all the wonderful resources that they provide every single day. 20 years ago, when I first started trading, the only resource in the world was FXStreet, and I am grateful for the relationship I've had with them for 20 years. So this is a tough gig. I don't try to make it sound like Forex trading is easy. It's very difficult. Okay? But it's worth the effort. But you have to manifest your destiny. Just sitting here listening is not going to help. Sitting in front of your charts and trading all day, every day is not going to make you a better trader. It's equivalent to golfing once a week for 25 years, never taking a lesson. And 25 years later, you still suck as a golfer. High and to the right, hitting out of the woods again. Huh? If you have 4 dozen golf balls in your golf bag. So, golfing a lot, going to the driving range and hitting 1,000 slices in a row will only make you a fantastic slicer. You will not become a better golfer until you practice. Now, I would say practice with a coach. If you were a professional athlete or an Olympic athlete, you would have coaches. But nonetheless, if you ain't got no money, you can do it on your own. And what I want you to do is manifest your destiny by focusing your time and your energy into improving. Focus, 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 improve, 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 learn, learn, learn. Don't worry about the trading aspect. You'll get better over time if you focus. So I encourage you to try hard, try harder, put in the time. It's going to be blood, sweat, and tears for years. But as a former venture capitalist, I've never seen a better business model than being a Forex trader. I've been doing this more than 20 years. And like I said, I'm right now in the process of building yet another fund, which I would expect to be running for the next 20, 25 years. So I'm doing this for the rest of my life. Why? There is nothing better, not even close. So if I can inspire you and prod you and push you and hug you and slap you into the right behavior and the right mindset, I hope I can. I consider myself a servant to you. You're the boss. I want to know how I can help. This is my contribution back to society. I hope you let me help. So again, thank you to our moderator. Thank you to FX Street. Peace on earth. May the pips be with you. May your profits be above average.